Hi, this is Kirk with Forex Trading Secrets, and we're going to be discussing 15 secrets to become a consistent trader quickly. Well, there's more than 15 things that we're going to be talking about, but that's what we titled this particular event. Everything that we will show you today can be learned quickly, and if you'd like to improve your trading performance, then this is a webinar that may be a difference in your trading career. What you need to get is an edge in the market is knowledge. Now, it's going to be correct knowledge. I know people that have all kind of knowledge. They can talk about everything that there is in the market, but they still have it all mixed up in their mind, and they can't trade. They don't have a consistent plan to follow. You need tools. Now you have your indicators and you have your trading platforms. Those are tools, but also having traders to collaborate with. That is a most powerful tool right there, is being able to talk to individuals. And then getting experience. And this is the main thing we're going to be talking about today is how do you get experience in a short period of time? Because with the knowledge and the tools, you need to practice them over and over to become proficient. So the things that you're really looking to be able to do would be to make pips daily, keep those pips, and then repeat it. Be able to know what to do, sit down the terminal, and you'll know how to start your trading each time you decide that you want to be trading. And we're going to go over a list of 15 things. We call them secrets because they're right out in the open, and many people don't even realize that they're there. And these secrets can be mastered by you in a short period of time. First of all, how to recognize a trend. Now, we'll go through these things and show you how to recognize a trend, but if you don't know how to recognize a trend, then you're always going to be frustrated, and half the time you'll be trading in the wrong direction. How to know when a trend is coming to an end. Once you find a trend, well, when is it over? It doesn't go forever. No trend does. They stop, they change, they rest, they continue, they turn around and go the other direction. How to identify high probability trades. Yes, there are a lot of trades you can get, but you want those that are giving you some high probabilities of having some success. How and when to exit trades. I know a lot of people can get in trades really well, and they'll have a trade go 30, 40, 50, 60 pips in their direction, and they don't know when to exit. And so it didn't hit their take profit. It was close, but it didn't hit it. Come back, and they end up with a 30 pip loss just because they didn't know how to close and when to close a trade. Learn which time frames to trade and when to trade them. That's really depends on your personality, your schedule, and your way you like to look at trading the time frames. How to learn how to trade more than 2 currency pairs. If you can trade 5 or 6 currency pairs at a time, then that'll just maximize your ability to trade. We'll talk about that a little bit more. How to know when the market's going to give you high probability trades. How to learn how to trade while and when working a full-time job. How to recognize chart patterns, and we'll be talking about all of these things. Learn how to control your emotions. Now, that's really a big issue. People get so emotional, that's why they don't know when to get out, they don't know when to get in, they're second guessing, but you need to become mechanical and have a path to follow, and how to learn how to be focused and consistent. Find your trading skills, the things that you like to do, and just do that no matter what noise is going on around you. If you're listening to someone else, that's great. Let them do what they're doing, but you are consistent and focused on what you're doing. And how to stop your losing trade from running too far, and how to let your winning trades run to completion instead of stopping them and getting out of the trade too early. Then how to keep a proper journal and records. You don't need a big elaborate section on this. We have a couple of things that are very simple and easy to do to keep journals and records. But if you're not doing that, you don't know where you're at, you don't know when you've improved, you don't know when you've gone back the other way, you don't know where you're at. So you need some type of at least a simple record keeping system to keep track of what's happening in your trading. And this is a big one. So this course we have is designed to help traders gain a year of experience in 30 days. Now you can even get much more experience in a shorter period of time if you put in the effort, but that's quite powerful. Most traders that we know that become successful using our system, they're really doing great, and the light comes on someplace between 4 and 6 weeks because they have to go through the material, have to learn what the steps are. and then that's where their big growth begins, and they start being able to trade on their own somewhat, and they start making more than they're losing, and then it just gets better and better as time goes by. To really become proficient, look at a year or two, but you can actually start making money and really see that you have a potential in really a short period of time if you know how to do that. So now, what I'm going to do is go to some charts and show you some of these things you can do to accelerate your learning. So I'm going to go through steps, different phases of our program. This is called our Jumpstart material. This is available on our website for free for you right now. You can go there and look at it. If you don't know how to find it, send me an email and I'll give you the link so you can go through and see the Jumpstart. Now, I'm going to use the same chart on 3 different extensions of our program. I'm starting with the Jumpstart, and then I'll add some more indicators and add some more. But this part will still be there. I'm just adding to whatever you see now. We're going to use the same time frames in the same place in the charts. We're on a 1-hour chart, and that's a larger time frame. Sometimes a 30, sometimes a 15 could be your larger, sometimes the day or the 4-hour. So you pick a larger time frame. I'm just going to use the hour and the 15-minute to show you what I'm talking about here. See, I've drawn some vertical lines. See where they're at? I drew it based on where this indicator is crossing below or above that 0 line. And that's momentum, and it's telling you that's a direction maybe you ought to be considering trading. So whenever if you're taking a trade here, there would have been a little bit of retracement, and then it came over here and took off. Now your exit signal, this is only one of several. People have identified up to 10 exit signals. I use about 2 or 3. I don't need to have 10 confirmations to tell me the same thing, but there are different things that people like to look for. So when we call these moving averages hot lines, and is what you want to have. Now this was below the 0 line. It crossed below the 0 line. The hot line was below. So what if you'd taken a trade there? Well, you could have stayed in and only would have gone 20 pips against you at that point. That may be too much. The thing you want to do is when it crosses fresh going in a direction, that would be where you'd say, well, that's probably where I want to start trading. But let's go to the 15-minute time frame now. 15-minute time frame. See, it's been really going for a while, so that's not fresh. So over here, when it starts crossing down here, and on this one, see, it went back 13 pips. Over in here, you can start seeing entry signals when it crossed below the 0 line, and you can add on. And when it goes above the 0 line and crosses, maybe that's where you ought to be getting out of that trade. Now I'm going to hit the minus key on my keyboard and zoom out a little bit. So we're seeing this area right here. You keep looking to trade in that direction. That 1 hour told you which direction to trade, so you don't have to second guess yourself. Just keep on trading that direction. And you'll have a lot of smaller moves. And then you'll hit these home runs every once in a while. Clear down to here with like 160 pips. What if you'd only taken the section out here? That's great. That's still a good move. So that's what you're looking to do. Here's how you gain the experience. You find the direction on a larger time frame. You can choose the 4 hour, 1 hour, 30 minute, whatever time frame you like. We're using the 1 hour. And then I'm going to do something on this chart, and you can go review it on the other charts or on the website. So I move this anchor right over here. I'm going to leave that white line there so I have it marked. Okay, so we know, you can see right here, it went below the 0 line right there. So that's the heads up. Now, it's what I'm going to do is go to that 15-minute chart. Now, what do you see on the 15-minute chart? Is this fresh? Well, not really. So I'm going to hit the F12 key and go across until I feel like there's a trade going short that's fresh. We know that what if we got in a little bit late, or it could be a little bit early? Then we need to be able to say, well, I'm going to stay in, or I'm going to get out and wait for a better entry and take that small loss. Okay, there's that white line right there. And so that would be where we'd be wanting to consider entering and then it turned on us. So if we'd gotten in, do you decide, oh, I want to get out? Well, your exit would be when it crosses. So if you've gotten in right here, it did go 10 pips in your favor, came back up and crossed, and you would have -5 if you had followed that example. And if you do this enough, you'll get a feel to know when it's really opening up and giving you the best entry. Now, so you notice this first part was choppy, and you can play with this enough, and you'll get to where you can really read the market quite well doing this. I'm going really fast, but this is all in detail in the Jumpstart system. You do this no matter which of the material I present to you today. You do the same exact thing, but you're using additional indicators to give you a heads up, and it even becomes easier as you get to more confirmation. You only need 2 or 3 confirmations to have it really play out for you. So right here, I'm going so fast that we missed this part right here. So say you're taking a trade here, well, and gotten out there, well, you would have maybe broken even, but it crossed again, so you're in right there. Now we're up 10 pips at that cross. It crossed back up. And so we could have made 8, 5, at least 5, 10 pips on that. Notice the momentum stayed below the zero line. That could be an indication that you could stay in and let this retrace just a little bit. See, that one didn't cross, and then this is where it really actually crossed. So if we'd gotten in there, it crossed, and then we had a good 15 to 20 pips right in that area. So that's how you do it. And then let's go across really quickly so you can see that big, you can see all these different moves that we're having here. Now there's different time frames you can manage this on and even come out better. Now we're approaching the spot where it really has taken off. Let's say right here it went below the zero line and we entered a trade right there. We know that we're going short, and of course we're looking in history. So we knew that someplace along here is going to take off. I don't remember if this is the right place or not. That happened to be the right place where that great big move took place. And so you exited right there. Well, what if you'd had 5 pips won, 10 pips lost, 3 pips won, 8 pips lost. So say you're negative 10, 15 pips. Then all of a sudden this big move hits and you take that trade. There, 80, 90 pips right there, more than made up for all those small trades that you had really not made a lot of money on at that point. So that's how the simulated trade, that's how you get a lot of experience in a short period of time. You're speeding up, slowing down, whatever you need to do to look at your indicators. And that helps you to be get more experience. Now, we've just been looking at this one spot right here. And that's where that big move took place. But then the market goes back the other direction. So right here, I move this anchor back over here. Now I'm not going to go through that exercise to waste your time because you can do this on your own. I'm presenting a concept here. See how this is going up. It shows you the hot lines are moving up. We call these moving averages hot lines. It's crossed here. The momentum's going up. You got 2 momentum indicators telling you that the market's moving up. That's on a 1-hour time frame. Here's what it looks like on a 15-minute time frame. Now I usually use swing highs or swing lows as areas where I would possibly enter. So that said, keep an eye out, and it passed that swing high. There's one right here or this top one. Either way, there was 20 pips before it actually broke. But you can see we call this off points. That means it's slowing. So I may not trade this because that's slowing. I want this to go below the zero line again, because we know that the 1 hour is going long. And then when this 15-minute comes back up, right there, that's where you could consider entering. Well, it went sideways. Well, what if you got in and out? Okay, that's fine. But then here's the big move. It got in, and it didn't really move very good, but then, look at 160 pips. And so that's what you can do when you can see what's taking place. be aware that not every trade is going to be a home run. You're going to have a few losses. If you can average your small losses and your small wins out and do not have big losses, then you can really do well at trading. But you got to be able to accept a loss here and there, 10, 15, 20 pip losses, 10, 15, 20 pip wins, your account's not growing, and then all of a sudden you get a big home run. Monday, Jed was trading and he made 113 or 118 pips, I can't remember, in the Asian session. Things were going his way. Yesterday, he didn't find a trade. He didn't force it. You average that out, he's well over 60, 55, 60 pips per day average, and that's still, you can make a lot of money doing that. So you don't have to be in the market all the time. It wasn't working well for him. He wasn't seeing things. There may have been things there, but he wasn't seeing them, so he didn't take any trades. We have traders tell us that all the time. I really traded well, but I didn't want to trade anymore because I didn't see really what I was looking for. Now, that's the jump start. That's free. You can go look at that anytime, and you can see how we simulate trading. With what I've shown you and what you see there, you can really perfect that. Now, let's add something to it, and you can simulate trade that. Okay, I've added an indicator up here. You notice where it crossed below and above? It's easier to see now. This had been going down for a while, so maybe I don't want to take a trade there because this is not fresh. Right in here is where it starts becoming fresh, but it hadn't crossed yet. Possibly it's trying to cross. Right here would have been your best entry signal. Now you have two indicators telling you that there's a trade here on this 1 hour. Now let's go to the 15 and see what it looks like on the 15. Right here, it had been going for a while. It's not fresh. Wouldn't take that. Over here, see, that's not fresh either. It's coming down, but right here it becomes fresh again. It did a retracement, and then this could have been good for 20 pips or however you want to do it. Now you can manage it on a different time frame and even get a better result. And this is that big move again. Notice how easy it was to spot the big move. One thing that we didn't talk about in the last bunch of charts, see how it went sideways? That's a great setup for a breakout. And when it breaks out down here, guess what happened? Right in here, it went below the zero line. Right in there, notice at that point, how it's breaking the swing low. That's your entry signal right there. You got an extra entry signal. You have three. One, hotlines 2, this other indicator, 3. 3 things telling you that now that's the way to trade. That's the direction you should be trading. Here's what the larger move. Here's what it looks like on the 1 hour. This is the part going up. See, it went up. There's some trade there. You don't trade here, but when it takes off again here, then that's when the nice big trade happens. Let's look at that on the 15-minute. Now we're looking at history, but you can see this develop once you put it over to the edge and you're in control of how fast you want to see the next bar. That's how you get a lot of experience. You don't have to wait 5 hours for the 15-minute bar because you can just say, well, that's not going, and you click it 20 times. Oh, there it is. There's the trade. Okay, this is the 15-minute. Which way are we going? At this line, we know the 1 hour said to consider long. Now, the hot line hadn't crossed there, but it crossed here. Now you have the right color change. The hot lines are going up, and this is above the zero line. What's your exit? Right here, 20 pips or so, when that crossed back below. Now, I didn't see a really great entry signal here. This was below when you're trading long, and it's below here, so that didn't help us out any. Right in here, you could have started taking trades. But remember that sideways movement? I would not trade right here until this broke above that swing high right there. And it broke above, what do we have? We have good solid confirmation. The hot lines are opened up. This is above the zero line. Right there's an entry. And you can just, this is on the 15-minute. and there were no exit signals, and you could have traded till, you get up here 150 pips, or you could have waited until the hotline crossed over here and still made over 100 pips on that move. So that's the concept. Now I'm going to move to the full nth degree course material. I'm showing you step by step. You notice how I just added 2. I did not change anything. I just added 2. And here's the same place. Right here we crossed, and we crossed. This is the whole nth degree course material you're seeing here. There are many things now that tell you to trade. This is telling me that it's not right on this. Well, that's the direction. We need to go to the 15-minute, excuse me. Now the 15-minute, it tells me this is not right. This is late. It's well into that move. So what do we want to do? We want to wait until it comes back down here. Additional confirmation. Additional confirmation really came right here. Guess what? It's almost by a swing low right in here. There's your trade right in there. It kept you out of a lot of this noise over here. Now let's scroll it across quickly. And what had happened right here? It's going sideways. It's got a 10 pip channel. I'm going to hit this slowly now. You know that it's coming up. And what we're looking for is right here. This going below the 0 line. That's what we're looking for, because the 1 hour says that's the direction we're trading. Okay, it's not quite below, but look what happened here. You got a couple of signals right there, and there's your entry. 1 or 2 places you could have entered right below that swing low, or you could have waited until that went below also. So right in there was the entry point. And you see how it takes off. See how fast we were able to complete that trade? You don't have to sit and labor over it. It's telling you that that's the way it's going. So if you had waited 15 minutes and you had entered right here and waited until you got down to this point, that's 2.5 hours roughly. And now it just keeps on going. Okay, right there was a possible exit signal. Let's go one more. Okay, definitely that would be a place you want to consider getting out. There's other way to management, but so we made 80 or 90 pips there. See how fast, how many hours we cut off to see that trade? We've only been going a few minutes here, and we could have taken 4 or 5 trades in that period of time. That's how you get a lot of experience in a short period of time. That is one way to do it. We'll show you some other ways as well. Okay, this is where we were at. Okay, so we just went to the charts, and now we're back to the screen here. So let's just look at this. I've highlighted some things in orange. We talked about the trend. You find a trend on a larger time frame, and then we didn't talk about when the trend is changing. That's another topic. High probability trades, when you get multiple indicators and multiple time frames telling you that's the direction. How and when to exit? Well, we showed you how to exit. When the hotlines cross is one great exit. That's there's webinars we have that go over in detail how to exit, but we showed you one of the very simple, straightforward when there's hotlines crossing. Which time frame to trade? Okay, now that's going to be of interest. We were trading the 1 hour, 30-minute, and 15-minute. You can use the same concept on the day, 4 hour, 1 hour, or the 4 hour, 30, and 15. You notice that I'm using 3 time frames together. So whatever your largest time frame is on the MetaTrader platform, use 3 of them grouped together. Some people say, I'll use the 4 hour and the 15-minute. Well, that's okay, but that 4 hour takes so long to change that you could have lost 50 pips before you even know that it's ready to change. That's why you want to keep them a little closer together. So you can use the 30, 15, 5, so forth. More than 1 or 2 currency pairs. Let me tell you how to do that very simply. When you know the news is coming out for the euro, for the pound, for the yen, for whatever country the news is coming out for, we don't trade the news, we trade around the time of the news. That could indicate that if the yen pairs move or the pound pairs are moving, if one of them is moving, probably all of them are moving. And there are 6 or 7 pairs or possibilities that you could trade at one time. You're really only managing a couple, and the rest are just kind of going along in that direction. You just have to keep an eye on them. That's where you can really compound your money, is where you get the currency pairs. So we've shared with some information there with you if you didn't already know or weren't already aware of that. Take more than one currency pair if you can. More than when the market has high probability of good moves. Now it could be around news time, but it could be when we shared with you when those momentums are changing and hotline are crossing. I'm going to go a little bit of detail here. While working a full-time job, I didn't say this in the presentation, but 2 things you can do. 1, trade the 4-hour, 1 hour, 30 or 15 minute. 4 hour for the direction and the 1 hour to enter, or the day 4 hour, 1 hour. Trade the larger time frames is one way of doing it. There's not one way better than another. Sometimes that's the best way because of your schedule. Other times you're working a full-time job, but you have a couple of hours in the evening. Then a good way to do that is find your directions on those larger time frames, and you might have some trades going there, but go to the smaller time frames, the 30, 15, and 5-minute time frames. Trade those smaller time frames, and you can take some pips out of the market many times right during that 1 hour that you may have to be in front of the computer. So if you want to take some quick trades, use the smaller time frames. If you know that you're going to see some good setups on those larger time frames and you're going to have to go to bed, or you're going to have to leave to go do some other things in your busy schedule, use the larger time frames. The same concepts work. You just have to expand your thinking to larger time frames, smaller time frames. Smaller time frames means smaller amount of pips per trade. Larger time frames, generally larger number of pips per trade. So that's working a full-time job. Either larger or smaller. It depends on how your schedule is working. Recognize chart patterns. Did you see patterns that we were talking about? How it goes, the market goes up and down and up and down. But we were finding the pattern based on indicators and the chart patterns as well. If you do this, you have a mechanical way of trading, and that will help you to eliminate your emotions. Oh yes, you can still get excited, but you're not nervous to the point you can't see straight, you can't determine whether you're going to need to get in or get out. Just mechanically take trades. Simulated trading, we showed you, you do that for, we suggest, a minimum of 30 minutes a day for 30 days. You've probably got a year's worth of experience in 1 month. That's just one method. There's some other things that will even compound that experience. So this way you can be focused and you can be consistent because you know exactly what you're looking for. Stop letting your trades run too long in the losses. Well, use an exit signal to get out. When it says to get out, get out. Allow your winning trades to keep on running. Well, what if it looks like it's hesitating? Well, the hotlines didn't tell you to get out. The market moved a little bit against you, but everything said still stay in, and you keep on going. Keeping a journal, we didn't discuss anything about that other than you need to keep a journal. We have some one-sheet journals that you can keep track of things, and a lot of experience in a short period of time. Simulated trading, that's what we showed you. We're going to show you some other things that are going to enhance your ability to get experience more quickly as well. Okay, our methods get results. Now the best thing about Forex Trade Secrets is that our system can work on all currency pairs, and the strategy can be implemented fast. It's not like you have to spend years to learn how to pull the trigger for the first time. You can be pulling the trigger the first day, the second day, the first week for sure. Many of our students are getting results in days, not months or years. Does that mean they're successful traders making a living? No. That means they are getting confidence and they know how to read the market, how to start entering trades. That's what it means. Are scalable. Our systems and methods are scalable. That means you can actually start doing things right away. You don't have to know everything before you can get results. I showed you how to get results, and as you learn that material, the next section, we have a whole section, that second set of charts that I showed you, there's a whole section just using that set of charts to get used to using those indicators. And then the rest of the section, the material goes over to how to use the complete course. But it's all just a progressive thing. But you can start making pips and being successful and gaining confidence early on. Our system allows you to work less, have more fun, and enjoy life. All this can be done between 5 and 10 hours a week. Now, I put 10 hours, but you don't have to trade 10 hours. Maybe you don't have 10 hours, but 5 hours is like an hour a day or an hour and a half for 3 or 4 days. And you can still do quite well in that shorter period of time if you know what you're doing and plan things out, and still get great results. Our strategies are repeatable. Once you learn how to do them, you can keep on doing the same thing over and over again. The market doesn't change. Oh, it gets a little choppy once in a while, but the system just moves along very repetitively. Nothing is exactly the same, but there are patterns that are very similar, close enough that you can recognize, oh, that's going to take off, that's going to slow down, that's going sideways. So you can implement these strategies you like and repeat the process day after day. And we have over 9 strategies that we talk about. I would suggest get 2 or 3 strategies that you like, that fit you, and focus on those. Don't try and focus on all 9 strategies, or else you'll get confused and you won't know which strategy to use when. There are multiple signals to help you find high probability trades, and there are multiple tools to help you manage your trades. So here's what you need to be able to do for yourself. Become disciplined, become mechanical. That's not emotional and erratic and doing something different all the time. And I mentioned a couple of strategies. Discipline yourself to that. Become mechanical, repeating the same thing. Become consistent. That'll get your confidence, and you'll be a confident trader. So what else is there? There's some other things. There are 21 Trading Lab webinars that come with the course material. These are answers to 21 questions, and we actually made a video, 20 to 30, 40 minutes each, answering the questions and showing people exactly how things work. There's a couple of acceleration coaching webinars to help people to get up to speed quickly. These were coaching sessions, and we actually included them in the course material. Gung Ho 50 Pip Club. What in the world is that? What's a 3-day pass? What's the Pip Club? Well, let me share that with you. The Pip Club is where we have 5 or 6, sometimes 8 skilled traders calling out trades as they take them. I'm entering the Aussie yen. I just entered the pound dollar. I just exited the euro yen. So they're telling you what they're doing. All those who attend can copy those trades in their own accounts. There are between 60 and 200 pips made during each session. Very seldom do we make less than 60. It does happen. Maybe the market's not moving. Not all the traders showed up one day, and then there weren't many pips made by being called out by the traders. But on average, there's quite a few pips. There are individual trades, not duplicate trades. Now, there might be 3 traders that all take the same pair. We only take one of those profits that they report, not all of them. So those are individual trades that anyone attending could individually have taken also. We know not every trader can take all of these trades. I can't take all of the trades that are called out. There's too many of them. I take as many as I can. I take the ones I'm interested in, and I do quite well. Sometimes I get upset that I should have taken one of the others that would have made me more. Well, that's just me. I'm making pips, so why should I be complaining about those that I lost because they're right in front of me? Well, I can only do so much. We are suggesting that an attendee, someone just showing up watching, can make at least 10 to 30 pips most days, averaging between 15 and 20 pips. That's someone who's very early on in the process. That's just once you learn how they're calling out the trades and listening to them and learning how our system works, this is how to gain experience quickly. You're seeing traders trade live, calling out trades. You can take those trades and see how it's working. The attendees are reporting. These are what the people are reporting to us. I mentioned 15 to 20 pips is realistic that you should be and could be making on a regular basis. Are there days you're going to make nothing? Yes. Are there days you're going to lose? Probably, because you didn't exit when the other trader exited, or you got nervous and exited and they stayed in and it came back in their direction. So yes, you can lose. We're not guaranteeing anything here, but the averages are you're going to have a high probability of making pips. And we have the people of the report, 35 to 75 pips in one day. These are people just watching. Now, on a day where there's 200 pips made, that's where usually you see these types of numbers coming out. Anything that's over 100 pips, you're getting 35 or 75 pips. These are people reporting. Now, these are some days there's only maximum of 10 or 15 pips that would be reality. Not a lot of people are not reporting, so we don't know. But we know that they're only making a few pips, or they didn't make any at all that day. But it's not that they weren't there to make. They were there, just they didn't understand how to do it or were still apprehensive. But the average is pretty good, that you're going to be able to do well. The average usually is enough to make about $100 or more per month if you're only trading 50 cents per trade. That's depending on the size of the account. So say if you had a $500 or $1,000 account and you traded 50 cents per trade, you're not going to overtrade your account if you have 1 or 2 trades on at a time, and that's going to make you 100 pips plus. Now, what if you have a 2,000, 3,000, 5,000 or higher account, and you're trading, say, 50 cents for every, I'm just going to round it off. I mean, there's no set rules here, 50 cents for every $1,000 that you have in your account. Well, what if you're trading $4,000? Well, that's $2. Well, now we can 4 times that $100. You're making $400 a month on your account. Those are the possibilities. This is earning while you are learning. Okay, now, so what I'm going to share here, I want you to write this down. This is a free video. It's a YouTube video that we've recorded and put on YouTube. Here's a link, and we recorded a PIP Club. This is a thing that happens on a regular basis. The thing was over an hour, maybe an hour and a half, I don't remember. I cut it down and just took out the parts where we're not just sitting there waiting for something to happen, because there are times when no one's talking. Well, there's nothing happening. We're looking for trades. But you'll hear a segment, I think it's 18, 19, 20 pips, I can't remember, minutes long, that's showing you exactly what happens in that PIP Club, so you can hear what's taking place and get a feel for what's taking place. So watch that. If anyone doesn't have that written down, let me know. We'll come back to it. I'm going to read it out slowly so you can write it down. https://youtube.be/ capital F, A, capital B, capital D, A, G, U, P, Q, capital Y, capital Q. Okay, if you didn't have that down, if you're interested at all in the PIP Club and seeing really what takes place when live traders taking trades, then watch that video. These are examples of how trades are called out, when trades are closed, and the pips that were made, the pips that were reported. This is a normal day. It's not the biggest day, it's not the smallest day, but it's just a sampling of one day. We recorded it, and that's what happened that day. So you may sign up. We talked about a 3-day visit. You can sign up and ask and request us for a 3-day visit to come to the PIP Club by sending an email to jed@forexstrategysecrets.com and ask for your 3-day pass. So we'll send you out the 3 days, and you'll have the links to be able to come and visit and see what's taking place there as well. This way you'll be able to see if it is going to work for you. There are two sessions. We have the US session and an Asian session. You may request a 3-day pass to one or both of these sessions. The US session is 3 days a week. The Asian session is 4 days a week. And you'll get passes to both those if you request both of them. Some people can only attend the Asian session, that's best for them, or the US session. If you request that you would want passes to both of them for basically a week, yes, you'll have access to both of those. Are there days that no trades are taken? Exactly, especially in the Asian session. One day we make over 120 pips, and the next day we don't even take a trade because it depends on what the market's doing. And so that's available there. Request the 3-day pass. Now, all of this is $497. You get the 3-day pass, but you get the course material. That's the thing you're buying, is the course material. These labs and acceleration things, they're extra. That's part of the course material. The pass is let you know how it works, what can be possible. Now, if you decide you like what you see, you have a video to show you what's going to take place. You can, if you buy in the next 24 hours, you'll also get, in addition to the course material, 2 months pass to the PIP clubs. That's a lot of trading right there. A lot of things to take place in the 2 months. Now, the PIP club is a subscription to attend these sessions, so this is actually a bonus that you're getting. And it's $75 per month for either of the sessions, or if you want to attend both sessions, $100 a month for both the US and the Asian session. Now, you get this free for the 2 months if you buy in the next 24 hours. So in 5 months, this could be roughly based on if you had a live account and took the trades and made the 100 pips that are very realistic by attending the PIP clubs, that would be $500. $100 a month for 5 months is $500. If your account is larger, you could make even more by trading larger lot sizes. Maybe you traded twice the 50 cents we recommended, or 4 times, or 2 lots, either mini lots. Then you can make upwards of a couple of $1,000s in a 5-month period of time. Here are the results of what the PIP Club was doing. This is what I have down here for July. In this July 5th, there's 163 pips made, individual trades, 161, pretty consistent for those 2 days, then 215. And then 135, 192, 153. So that's what we're proposing, that it's realistic to think that you could make 15, 20 pips per day with this many trades being called out. I got the 12, 13, 14, I've screwed it up. I didn't to get the right dates in. You notice the numbers are here. This is correct. This page, I have different numbers and I didn't change the dates. So 96, 70, 173, 138, and then 19, 20, 21st is 186, 199, 85 pips. Do I have another one? That's what's made during the weeks that we've had. We've only been doing the PIP Club for, we're in the 5th week, and it has turned out to be a fantastic thing. First of all, we had to get the traders and screen them, and we're getting better, getting used to trading with one another and calling things out, not tripping over each other. So here's the link. If you want to get your copy of the Nth Degree Trading System, here's the link, the tinyurl.com/Z2PST6N. You'll have to write this down because you can't copy it out of a video or off your screen, and write it down, and it will be sent out in the recording of the video that I hope to get out for sure by tomorrow. And if you have any questions that we don't answer today, then you can send an email to Jed@ForexTradingSecrets and either address it to me or you can call the phone number.